Welcome to this very special conversation, and we have with us at NDTV Profit the man of the day, Anantha Nageswaran, Chief Economic Advisor. Welcome to this very special conversation, sir. In fact, I would like to start, by asking you about the growth outlook, because that's one of the key takeaways of economic survey. That for FY27, the range is elevated to between 6.8 and 7.2%. And in fact, for the medium term as well, you have elevated and raised the, projection. How confident are you to sustain this growth momentum going forward, given the, uncertainties, especially the tariff uncertainties in mind?
We have factored in the tariff uncertainty, and yet we have gone ahead and projected the medium-term growth rate of 7%. So we are quite confident of achieving this number on the back of the domestic reforms and the various free trade agreements we have been signing, which will all become operational in the next 10 to 12 months with the different countries and regions, and also the enthusiasm with which states and the union government are pursuing economic reforms at this stage. So these factors put together, and of course the very healthy state of the Indian financial system at the moment, all these factors have given us the confidence to be able to elevate and upgrade India's potential growth from 6.5% to 7%.
Sir, as you rightly pointed out, and during your briefing also, a series of FTA has been signed by India, and the recent one is with European Union, and that is going to open access to the larger market. We are talking about 27 countries. The survey did mention about the India-US deal as well, hoping to be closed soon this year itself. What led to that confidence in the survey? Are you being optimistic about it, or is there any rationale behind it?
No, we are expressing the hope that it will be done. So we don't have any crystal ball, nor are we saying we attach a particular probability to it. It's a hope that we have expressed. But our forecasts are not dependent on any of these things materializing. They are independent of that. If these things materialize, then we will become even more comfortable about our growth numbers.
Certainly, sir. In fact, one of the interesting points which you mentioned during the briefing, this is the era of easy money, and that has resulted and led to, in fact, global market risk. Could you please elaborate a bit why you said so?
In the last, since the global financial crisis, money has been more easy than hard or restrictive. So monetary policy, that is why we experienced even double-digit inflation in some parts of the advanced world in 22-23. And we are seeing that if you look at the financial conditions indices in the United States, for example, they are as accommodative as they were in 2017 when interest rates were 0.5%. So that is exactly the reason why we said, looking at the financial conditions index for different geographical regions in the world, money has been easy, and that has resulted in the proliferation of private credit, in the stock market valuations, etc.
Can we say that that's the reason, among the reason, stock markets being expensive?
It's one of the factors definitely that has been driving the stock market valuations in the developed world, for example.
On the foreign investment, sir, in fact, we do know that it's tepid due to, elevated uncertainties. And in fact, I wanted to ask that survey has been talking about deregulation. In fact, the last survey did touch upon that subject. And there are a lot of emphasis from the government side as well on, easing compliance, decriminalized provision, which has been there for a very long time. How are you seeing that? And in fact, do you see that all those, measures, especially towards deregulation, is going to attract the foreign investment?
Yes, definitely. I think timing may be influenced by a lot of factors beyond our control, but we continue to do whatever is in our control, and deregulation is one of them. Then we also thrown open the insurance sector, the nuclear power generation sector to foreign investors, and we're also trying to give them tax policy certainties, etc. So I think policy is focused on giving certainty, and together with deregulation, it will definitely bring in more investor interest down the road.
Just two last questions, sir. One on the rupee, and you briefly kind of addressed that during your press conference as well. But just for understanding that, on rupee, you said that decline in rupee, because it's reaching, nearly its lows. So it's not reflecting the fundamentals, economic fundamentals, but at the same time, it's also somewhere helping in softening the tariff blow. If you could give some sense that whether the foreign investors are, is not coming to India, you think rupee reaching new lows is one of the factors?
No, I think it's difficult to, isolate and zero in on such specific arguments. We don't know. So a simple answer is we don't know. I think at the moment, yes, foreign investors could be influenced by multiple things happening in the world. There are in fact so many factors that it is very difficult for anyone to ascribe a particular weight to a single factor. And rupee probably, rather than influencing the foreign investors, could be a reflection of the foreign investors' reluctance to invest, which is based on geopolitical factors, the tariff uncertainty, etc.